Chevron buying Anadarko for $33 billion in cash in a massive deal that boosted the entire energy sector. This comes as David Faber reported Occidental also bid more than $70 a share for Anadarko. So with deal fever seeming to hit the sector, we figured this could be a great time to play a fast money classic.
We love
Matchmaker.
Oh, yeah.
What is the perfect energy match? Tim Seymour, what do you say?
Well, I would add two companies that are very well known, both attractive, could be attractive to each other for the following reasons. Let's talk about Exxon and Chesapeake. Exxon, ultimately, massive balance sheet, has not been growing anywhere on the upstream, actually has the ability to exert a lot of cost efficiencies. Chesapeake has balance sheet issues, and it's been a story of basically a balance sheet cleanup, possibly some divestitures over the last 3 years, heavy into nat gas. Basically, a place that Exxon made a massive investment in XTO 5 years ago. So, look, I like this deal because I think it's a case where you can actually improve the dynamics at Chesapeake very quickly with a company like Exxon with discipline, cost discipline, and some scale.
Let me just push back a little bit on that. So I can see the wisdom of that, but Chesapeake isn't as big as some of the other ones out there.
It's not.
And if you're the Exxon, you want to move the needle with the deal.
And it's no Permian centric at all. So they sold that a while ago, and the XTO deal blew up in their face. So so they've been leaning towards more private companies versus going out and making a big splash like this.
My view on this is, though, there are assets here that I think Exxon can improve upon. And while the Chevron Anadarko deal is a game changer for both companies. But I don't think you need to have that be for Exxon and Chesapeake. It is for Chesapeake.
All right, next up to play this game. Chairwoman.
Yeah.
What's a perfect match?
Exxon, I guess, making the rounds.
Yeah.
Slutty Exxon, right? And Pioneer. Or whatever, maybe just active.
Lonely.
Very friendly.
It's a Permian thing. Although, normally when there's one big deal announced, I don't love to play matchmaker, but it's fun. And actually, if Occidental is out there as well, then there is this animal spirits trying to look to do deals. That happens. So that would be my pick.
Now, this is
Pioneer.
unprecedented because we asked all these guys, the two players, and everyone said Exxon and somebody else. So Grasso.
So there are two. I'm going to say Exxon as well, but there are two other companies, just to state it for the people that are looking at this spot: Total and Royal Dutch Shell.
If you're going to go integrated buying a smaller company, but there could be as David Faber reported, it could have been an Anadarko Oxy. I mean, it doesn't have to be a. It doesn't
have to be, and there could be a lot of mid-tier capitalization companies that could do it.
With that said,
so Concho. So for me, it's CXO. I do believe that you want to have a Permian presence. I do believe that you want the right acreage, and the way that these things match up, Exxon and Concho have a lot of overlap, and I think this would make a ton of sense with the Permian.
Guy, your combo.
Well, it's Exxon. And to your point, we weren't together when we did this.
Right. You independently decided Exxon should buy something, which is interesting, I think.
I came up with Apache. Now, this would probably be about a $25 billion deal, which is obviously a little bit bigger than Chesapeake. Would make sense for Exxon on a number of levels. They have operations here, UK, and in Egypt. Same type of balance sheet issues, not as bad as Chesapeake. All these companies are somewhat levered. If Exxon can somehow unleash the potential of these companies, it makes a lot of sense. So, APA.